Philadelphia Eagles Super Bowl win driving record merchandise sales. Sports giant Fanatics still riding that momentum with its commerce betting, collectibles business. Fanatics has a valuation of $17 billion, according to Forge Global. Joining us now, Fanatics CEO Michael Rubin. Is that about right?
No.
That's what I thought.
It's not the first time I've heard something wrong before. No.
But
Fanatics
I saw much higher than that.
Yeah, it trades at about $25 billion today, and it's been pretty consistent over the last couple of months. So there's been a fair amount of trading there. That must be probably one of the businesses. I'm guessing that's probably the collectibles business, not
Forge
the entire
Global,
business.
Yeah. Forge Global, we specifically was talking about one of, not the entire entity.
Yeah, that's right.
Okay. As far as the Super Bowl went, there was only one other event that sold more merchandise. What was it?
Chicago Cubs. NFL. So the Eagles had the absolute record for most hot market sales of an NFL for a Super Bowl. But if you look in the history of our company, Cubs was the biggest hot market ever. Those fans had not won for 100-ish years, and they had a lot of pent-up demand. But Eagles fans, Philly fans, they're incredible, and they showed up in a really big way.
They did. You have done a lot of acquisitions. How are you feeling now? You feeling like you're still digesting some, or you're ready to go?
No, it's a great question. I think when we reinvented the company in 2020, 21, I think the first 2 years were really about setting the strategy, doing the M&A deals to enable some of the strategy, doing some of the business development deals. So I'd say 21 and 22 were really about the enabling deals to kind of bring our vision to light. And that we took a lot on during 21 and 22. I'd say the last year and a half have really just been about laser focused execution. And that's why the business has been so good. When you take a lot on, you've got to absorb it. So probably the most interesting stat is I think in 21 and 22, I think we spent $1.5 billion or $2 billion in M&A. I think in the last year and a half, we spent less than $100 million in M&A. And we don't really have things that we need to buy now. I think we have all the assets we need to build, all the assets we need in place today to build a company that could, be a $5 to $10 billion EBITDA business long term.
What is the vision of the company now? What versus what it was versus what it is?
Yeah. So when I started coming on here, I was just thinking about this. I think I've been coming on here for probably 20 plus years. Yeah. It was really about building the best and most fan friendly, what we call commerce business, really everything around fan gear. And then in 2020, 21, we really reinvented the company into a digital sports platform. So today we have three businesses. The original business, Fanatics Commerce, that this year will be close to a $7 billion commerce division, really focused 100% on fan gear. We have the collectibles business that when we came up with the idea in 2000 and late 2020, and then we bought Topps January 1st, 2022, it was a $500 million business. That was $1.6 billion last year. It'll be over $2 billion this year. And when all the rights kick in from the NFL, the NBA, and the English Premier League over the next year, that'll be approaching a $3 billion business next year. And then we have the Fanatics betting and gaming business, which we only launched 16 months ago. We've worked at 6.5% of the market in the sports betting business. So, and by the way, Joe, we're going to do a check. We're going to do a check on your phone.
I know.
If the Fanatics Sportsbook app is not there, I'm going to have to go to
You're bullying me.
We're going to have to go to Kramer's show or either that or we're going to throw you out of here. I'm only going to work with Becky.
You think you can make money on my $5 bets?
Yeah,
you still want me.
Absolutely.
6.5% market share is pretty big.
Yeah,
look, I'll tell you, realistically, we're doing better than everyone expected, and we expected ourselves. So we went out there with a bold vision saying, look, we want to be in these three businesses. We want to be in the fan gear business, we want to be in the collectibles business, and we want to be in the betting and gaming business. And obviously, in the fan gear business and the collectibles business, we're the market leader. In the betting and gaming business, we're the underdog, and we love being the underdog. And I'll tell you, DraftKings and FanDuel, they're really good companies. So for us to go from essentially no market share to 6.5%,
that's what I mean.
In 16 months, we're excited.
What are your customer acquisition costs? Because they're pretty high for those two other companies.
Yeah, much less. We're acquiring customers for today in the 9 or 10 month range, which is substantially less than FanDuel and DraftKings. The reason is because Fanatics as a brand is a well-known company. We have 115 million customers in our database that have bought merchandise from us. We had 23 million unique customers buy from us just online last year. In the lid stores that we own, we probably had another 10 million customers buy from us. So we touch so many customers and so many different touch points. And so that's been a real advantage for us. But I mean, look, I think today we're already in December. We were the third largest player in the online sports market, kind of tied with MGM. And again, if you would have asked people 2 years ago, they'd say, Michael's nuts. He has no chance. This isn't going to work. And today people are saying they got the third best ranked product, and they're the third largest from a market share perspective. By the way, distant third to FanDuel and DraftKings, who we have a lot of respect for.
Can I pivot to just a slightly different topic, which is you made a big bet on baseball, generally, Major League Baseball, obviously baseball cards, the whole thing. MLB not making a deal with ESPN because ESPN was not willing to pay more than they used to. What does that say about the state of baseball in America? Yeah,
so baseball for us is doing great, not good. Okay? The rule changes they've made have been really well accepted. And when you change things and do something new for the first time, a lot of times people don't like that. They don't accept that. I think the rule changes have been universally positive for the sport. I mean, I can't go through one by one, but I think they've been universally positive. I can tell you, in the trading card business, baseball, when we started in January of 22, was the third player. It was a $370 million business, a distant third to the NBA and to the NFL. Today, baseball's number one by a mile. They did $850 million last year in baseball trading cards. And, you know, NBA and NFL are still in that same range that they were. So a lot of momentum in the sport.
Okay, so why is that happening on one side? Yeah. And ESPN is saying, no mas, we can't pay this money anymore. And there's all sorts of new questions about the valuations of baseball.
It's a great question. Let me just tell you one more data point. Our FanDuel business in baseball also doing really well. So we see momentum across the entire consumer products business. What I tell you is I've obviously have a front seat to a lot of these media deals, not just in baseball, but across all of the sports. And a lot of times you see one person who says, this isn't worth that, and then two streamers show up and pay 3 times that. I would tell you, if I were a betting person today, I think the value of the baseball rights will be meaningfully greater.